Saving America one entrepreneur at a time. It's the Biz Wrap Podcast with your host, Michael Manahan.
It's Biz Wrap Radio, the show that celebrates entrepreneurs and small business with your host, small businessman, educator, and author, Michael Manahan.
And welcome to another edition of Biz Wrap Radio. It's your host, Michael Manahan. Thank you so much for joining me today. We've got a great show lined up today, as we always do. If you're not familiar with Biz Wrap Radio, we are the show all about small business and entrepreneurs. Yes, we are here trying to help the small business people of America, the entrepreneurs of America, do what they do, which is to create jobs and make profits. And yeah, you know something, that profit word, it's not really a dirty word. I know some folks in Washington would have you think that profits are nasty and evil people generate profits, but that's really what creates the wealth that makes everybody wealthy. You know, here in America, we've got millions of small businesses. Most people in the United States actually work for a small business. As we pulled out of the recession, most of the new jobs were created by small businesses, and most of the small businesses that I know are great members of the community. You know, they make a profit, the owners make a profit, they take care of their employees, they take care of their families, and they also participate in the community. So we're huge fans on this show of small business people and entrepreneurs, and we're here to help small business people and entrepreneurs be more successful. Now, I've got a guest on today, and I'm so excited to have him joining me. He is a securities attorney. He's an expert in securities, formerly had his own firm, now in-house counsel for an entrepreneurial venture. His name was Michael Hoffman. And Michael, thank you so much for joining me on the show today.
Mike, thank you so much for having me on Biz Wrap Radio. It's a real pleasure and honor to be one of your guests. Thank you.
Oh, not a problem. Now, you know, securities, a lot of small companies are trying to raise money. And the days are gone when you as a small business person could go down to your local bank. Ever see those movies like from the 1930s and the 1940s? And the business guy actually goes into the bank. He meets with the banker eyes him up and down, and then, yeah, okay, we'll fund your business. Like that hasn't happened for about 40 years. So small companies have to raise money, and a lot of small companies, you know, if the owner doesn't have the money and maybe his family doesn't have the money, they've got to go to people outside, friends, family, people at church, people in their business organizations, people they meet in the course of doing business, and that's their source of funds. But let me ask you a question. If I start selling stock in my company and I'm selling it to the other people who go to my same church, is that something that I have to worry about securities laws?
Well, it's a good question, Michael. Most people don't really know whether or not they're actually selling a security. But if you're giving someone the opportunity to profit by buying an investment, by buying a security in your company, then yes, they do have to comply with several rules and regulations for offering and selling those securities.
So you talked about a security, and you know, people in the financial world like you and me, we throw these terms around with no problems, but not everybody understands exactly what a security is. So if I'm selling stock in my company, that's a security, right?
That's right. If you're selling stock in your company, that's a security. Corporations have shares of stock. They have shareholders or stockholders. Limited liability companies have a similar kind of structure with their owners called members, limited liability company members, and also with partnerships. There are general partnerships and limited partnerships. If you are buying an investment in a limited partnership, that also can be deemed a security.
Okay, so it could be an interest in a corporation or a partnership or an LLC Now, what about if I'm selling debt? What about if I go to my people at my church and say, okay, each one of you loan me $10,000 to get my business off the ground?
Well, the way that the definition of security is crafted under pretty much all of the state laws as well as federal law, anytime that you give someone an opportunity to profit vis-a-vis share of stock or debt is also considered a security. The only time debt's really not considered to be a security is if you were to go to your bank officer and ask for a loan. Those types of entities are in the business, savings and loans banks are in the business of making loans. So that wouldn't be a security. But for anybody else, if you're a company and that's not your regular business, then you are selling an investment and you have to comply with the rules and regulations that govern the offer and sale of those interests.
Wow. So if you're a small business person, an entrepreneur, and you want to raise capital for your business, you're not going to a bank that is in the business of loaning money or some other institution that's in the business of your loaning money, but you're either borrowing from miscellaneous people could be the people of the church, the people in your business club, what have you. Whether you're borrowing from them or you're selling them stock in your company, you are subject to securities laws, and this would be the laws that are I guess, pronounced under the Securities and Exchange Commission federally. But what about at the state level? Are there state regulations as well?
Yes, there are state regulations. It's a good question, Mike. There's basically 50 mini SECs, and each one of those 51s are states. They all have their own regulations and compliance officers that are wanting you to comply with the rules.
So you not only have to be concerned with the federal rules, you need to be concerned with the state rules. How complex are these rules? Is this something you can kind of self-learn? I know, used to be if you wanted to create a will, you had to go to an attorney and he charged you to create the will. But now you can go online, you can create your own will. You don't need an attorney. Are these rules simple enough that I could just do some studying on the internet, or do I really need the services of a professional such as yourself before I embark on getting other people's money to use in my business?
Well, it's always a good idea to have a professional, and I think any successful entrepreneur really wants to think hard about which professionals they want to be part of their venture. You're only going to be as successful as the people that you pick, the people that surround you. So that includes a good certified public accountant, CPA. It includes a good attorney advisor, particularly a business attorney advisor. It would potentially, depending on how many employees you have, HR people. So you really want to be aware of all of the different functions of what it is to start a business, and think about whether you're going to bring that function in-house or you're going to source it out to an outside consultant, like an outside attorney.
Gotcha. So this is not something you should embark upon lightly as a small business person. I hear this all the time. I often have an entrepreneur come to me, and he says, "I need to raise some money, Mike." And I say, "Okay, well, how have you funded your business so far?" And he'll say, "Oh, well, I've got I've got a couple of investors. 3 or 4 guys I know have put money into the company." Very often, not only did they not even consult an attorney, but I had one experience recently where the guy had taken $100,000 from an associate. There was not even a written agreement as to what the guy was getting or what he was entitled to. So that's pretty scary stuff.
It is. It happens quite frequently. A lot of investments are made on a handshake. A lot of people like to do business based on trust, and they want to make sure that they can trust the people. But it's always a good idea to have an attorney to help you document what the particular responsibilities and obligations are of everyone involved in a company, especially when it's getting started. And no more apparent is that when you actually are taking money from people to invest in your company. So clearly spelling out what the returns for them will be, as well as the risks and uncertainties that might result with starting up a business venture.
Okay, well, that's good information. We're going to talk a lot more about this. You are listening to Mike Manahan, Biz Rap Radio. I'm speaking today with Michael Hoffman, securities attorney, securities expert. And we're going to take this conversation up right after we go for commercials. And we'll be back right after this. And welcome back to Biz Rap Radio. It's your host, Michael Manahan. Thank you so much for joining me today, and thanks for sticking with me if you were listening to the first part of the show. If you just joined us, we are Biz Rap Radio, the show all about small business and entrepreneurs, and we are talking today with Michael Hoffman. Now, I should let you know, Michael and I go back many, many years. We've worked together on and off, at least 15 years, maybe a little longer. And Michael is a securities expert. He is one of those attorneys that specializes in securities law. And just so we're clear about what securities law is are the laws that govern companies when they are raising money from other people. And it doesn't matter whether it's stock or if you're talking about options or if you're giving, even debt can be included. But if you're an entrepreneur and you're out there trying to raise money from other people, other than, say, a conventional bank or something, you have to be concerned about complying with the securities laws. And Michael's going to give us a ton of information on all of that here today. So, Michael, once again, thanks for being on the show.
Mike, it's my pleasure. Thanks again for having me.
So we just kind of finished off the last segment talking about the fact that if you do actually take money from somebody, whether it's in the form of a debt or you're selling some stock in the company, that you need some form of documentation. You need some sort of document that outlines the terms and conditions of the transaction. You know, how much of the company you're selling, how many shares the person might get in the company. But you mentioned something that a lot of people listening probably have never heard of, and that is risk factors. So what exactly are these risk factors, and what is our obligation to let people know who might be investing in our company how risky our deal actually is?
That's a great question, Mike. When a company is looking to go out there and raise capital to be able to form a business, depending on its appeal to investors, it may appeal to a very large group of investors that are both professional and unsophisticated type of investors. And then there's other kinds of investments that are, say, maybe more of like a venture capital kind of investment where there's just a professional firm that's going to be looking at making this kind of investment. You hear about these deals like Facebook and other Twitter and other companies that are getting started through these venture capital investments. And really, like the world for raising money today, it can be focused on tech or biotech, different industry areas, or on a very small scale entrepreneurial kind of level. But for making an offering of an investment, of a security, to just any old person, that regardless of their net worth, and there's different requirements under the securities laws of who you can make offerings to. But if you are going to make an offering to an individual with that has a net worth of less than $1 million, not including their house, set to exclude the value of the house, and they're not making at least $200,000 a year or $300,000 with their spouse, then if you're going to be making offerings to those kinds of people, they call those people unaccredited investors, then yes, you need to put together a document with detailed information on the business of all the things that optimistically can go right, but also what they call risk factors, and the things that basically explain that the company could run out of money. It may never get to start its business. Things can happen that no one's foreseeing, but it may not be able to get the customers, to be able to get the revenues, grow the business, be profitable.
Well, and we call that a private placement memorandum or an offering document. And some of those can be very thick and complicated. And is that, again, let's go back to the professional side of things, is that really something that you need somebody to, like such as yourself, somebody who knows the securities rules and regulations to help you put that together?
Definitely. Nobody who's not a licensed attorney that specializes in this nobody would consider putting one of those things together on their own if they really understood the challenges of putting that kind of document together. I mean, certainly you can do a lot of self-help, and there's a lot of great resources available online. There's great resources that are put out by the SEC, by law firms that explain a lot of the rules and the regulations. But ultimately, no matter what you do, you still want to have a professional securities attorney, corporate securities attorney, look at those documents and bless them, so to speak, before you go out there and try and raise a lot of money. Because it's basically your insurance policy. Everyone talks about insurance and having an insurance policy to cover, risks that can happen with the business. So this memorandum, this private placement memorandum, or sometimes called an offering memorandum, basically is the entrepreneur's insurance policy to make sure that they've properly disclosed, and disclosure is the key word here. Think of disclosure as like a spotlight, putting sunshine on the businesses and what's happening with respect to the business. So whether it's good or bad or ugly or anything, the law just requires that you put sunshine on it, put a spotlight on it to let people know what you're actually doing in your business and let them make an informed investment decision.
Right.
So that's what these documents are for.
Gotcha. So really what the securities laws are basically saying here is if you're going to get somebody to put money into your business, you must disclose an appropriate amount of information to those people, and that disclosure not only includes all of the good stuff, hey, I've got these great customers and these great products, but also maybe some things that aren't so good. And what are the consequences? Let's say, for instance, as an example, let's say I was raising money and I had a lawsuit against the company, and I didn't disclose that to an investor. And then the lawsuit ended up wiping out the company, and I declared bankruptcy. Would that be a civil action, or could I potentially be criminally liable?
Well, with securities laws, they can be civil and they also can be criminal. So the Securities and Exchange Commission can always notify the FBI or any kind of state law enforcement authorities to take a look at something. If there's fraud involved and people are being deceived, then the securities laws do allow for both criminal penalties as well to be imposed on violators.
And I think it's important to note for people who are listening that you can have liability in more than one area. So first of all, the person who put the money into the company, if he or she lost their investment, they could potentially sue you if they felt you tried to pull the wool over their eyes. But the actual government could sue you, the Securities and Exchange Commission, and they could sue you civilly. But then if they investigated and they thought you did something that was really egregious, they could actually file criminal charges against you. Am I correct?
That's right. You can have criminal charges brought against you. You see a lot of times today, they're sort of the enforcement agencies are being staffed by prosecutors, former prosecutors, and they want to find the most egregious, the worst cases out there and bring criminal charges against people for defrauding investors to basically set an example so that other people out there won't be taken advantage of in the same way, and to sort of act as a deterrent, I guess, to take the sort of the worst cases and to criminalize those and put out press releases to let people know that if you do this, you can get in trouble and the fines are serious.
Right, and having worked in the security, I guess having been around publicly traded companies for the very large part of my career, I can tell everybody listening right now that when the feds come after you, they are worse than pit bulls. They do not give up, and they've got more money than God, and it is really, really tough to fight them. So very often when they come after you, even if it's a little gray, and even if your attorney says, well, you might take it to court and you might win, they've got you up against the wall. There's not really much you can do. Hey, Michael, we've got literally about 30 seconds here before we go to commercial break. So let me just let everybody know it's Mike Manahan, Biz Rap Radio. I'm talking to Michael Hoffman. He's a securities and exchange attorney, professional in securities law, had a private practice, now working as in-house counsel for an entrepreneurial venture. And we're going to have more on the ins and outs of securities laws and how it might affect you and what you're doing in your business as you try to raise the capital you need to launch your enterprise. We'll be back right after these messages. And welcome back to Biz Rap Radio. Your host, Michael Manahan, on the line today with Michael Hoffman, securities attorney, old friend of mine. Well, I should say he's been a friend for a long time. I'm not sure he's that old, but Michael, again, thanks for joining me on the show today.
Absolutely, Michael. Thank you very much.
And if you
it's been 23 years of practicing. So
wow, 23 years.
The years have really flown by quickly.
It does go very quickly. Wow, that's amazing. Well, we've been talking about a little bit about raising money. I know a lot of the entrepreneurs listening, a lot of the small businesses listening, they need capital to grow their business. And it used to be, as we mentioned earlier, you might get that money from a bank, and that is almost impossible now for any kind of small business, early stage venture. Basically, the banks are ready to loan to you when you don't need the money anymore. And what they're really encouraging these days, some of these banks, is they're saying, well, you know what, we'll just give you this nice big fat credit card. Like I give you a credit card with a $50,000 limit on it. And then your payment is late one day, and they jack the interest rate up from 11% to 29%. And I can just see those fat cats in the boardroom somewhere in New York, on the 82nd floor, smoking cigars and drinking cognac and saying, here's a great idea, guys, or we can really make a ton of money. We'll set the interest rate at 11%, and if the person's one day late, we'll stiff them and jack it up to 29%. Meanwhile, they're getting money from the Fed for basically nothing. So the entrepreneurs in this country, what do? They got to go out and raise money from private individuals, friends and family, maybe people at their church, people in their business community, people they know. But Michael, sometimes you run out of close associates and friends. I've got a business relationship with quite a number of people, but if you really need to raise money, maybe you got to talk to strangers. And you mentioned the fact that to protect yourself, you should have a proper document called a private placement memorandum, some kind of offering document. It not only discloses information about the company, but it covers risk factors that might affect the person's investment decision. But let's say I've got my private placement memorandum, and now I'm ready to go out and hopefully find some of these investors. How do I do that? Can I advertise on the internet? Are there websites that I can go to? I mean, what's the way that I can get my word out there to the people who have money and show them what I'm trying to do?
Well, today there's several different ways to get your story out there to the investing public. If you've gone through all of your friends and friends of friends, and you don't think there's any more. Today, you can go ahead and raise money through social media, through the internet. And there are websites that allow an entrepreneur to put up their business plan, to put up a private placement memorandum, and get people to want to invest. Those types of websites out there, they call them crowdfunding websites.
Mm-hmm.
That basically allow investors to sort of access the crowd, access your social media, your Facebook friends network to get people to want to invest in your business.
So let's say I've already got a small business. I've got some product. It's reasonably successful. I'm doing, I don't know, $200,000 or $300,000 a year, making a small profit, just enough to keep the bill collectors away. But I've developed a maybe 200 or 300 or 500 people who've actually purchased my product and who are on my email list because I'm collecting their email addresses as I should as a good business person. And but I think this product could really explode, but I need $1 million really to market this. Can I go to my customers who've purchased my product already and get money and ask them to invest in my company?
You can. You can do that through a private placement memorandum. You don't necessarily need to put that up on the internet. You can go to those folks directly. However, there's two things. Either those folks already have to meet this accredited investor standard of basically $1 million net worth, or the $200,000 of income, $300,000 with their spouse level, or they can be sophisticated, but you'll need a really detailed private placement memorandum to give to them. It has all the bells and whistles of what you would see if a company was trying to access the public markets and do like an IPO. So very detailed private placement memorandum, pretty thick in terms of the number of the pages. And securities attorneys do draft those kinds of documents.
Okay, so I just can't send an email out to everybody and say, hey, create a little internet form and say, click here, and send me $10,000. I've got to actually put together some documentation. Well, what about this crowdfunding where I've heard that, you could go to unsophisticated investors and, collect $500 each from them or something like that. Do those laws actually exist now? Are there platforms that would allow me to do that?
Yes. Well, basically in the world of crowdfunding, there's two different types of platforms. One is like a donation-based, reward-based kind of platform like you see on Indiegogo or sites like Kickstarter to help companies get their products sold. They'll take money up front and they'll make products like on a pre-production sort of run, and you pay a certain amount of money to them as a donation. You might get a discount of some percentage on the product. You might get a signed copy. A lot of artists will help get help from their fan base by getting their fans to give them some money to help them pay for recording fees for their album. And they'll get a signed copy or a concert ticket or some kind of VIP ticket to their next concert where they come to their town. So there's donation-based crowdfunding sites, and then there's the selling of the stock type of websites. And then if a company is going to sell stock vis-a-vis that kind of method, they have to put together an online form, and it has to be filled out and filed with the Securities and Exchange Commission and approved, actually, before the company can go out there and start trying to sell its stock on the internet.
Oh, well, so I didn't realize that. So some of these internet portals, I guess they call them, that allow you to sell stock to unaccredited investors, you actually have to have whatever offering documents you're putting on that site. They have to be approved by the Securities and Exchange Commission?
They do. They have to be approved ahead by the Securities and Exchange Commission. And the form itself, it can be prepared by the entrepreneur, but again, it's always good to have an attorney to help you sort of put it together. And once you've got the green light from the SEC, you can go ahead and list your offering on one of these sites. Of course, they're going to want to charge you a fee for doing that. But you also really have to think hard about how do you create the interest in the offering? What's going to make it appealing for investors, and be able to sort of drive the traffic, to be able to use the internet, use Google searches, search engine optimization, different ways to create the buzz so that people know that they've got to invest, and they've got to invest now before the offering is going to be ending, and then they're going to miss out. So all those creative ways to be able to get people to want to understand that you've got something that is worth them putting their hard-earned dollars into.
Gotcha. So, but you can actually, once you go through that process, you can actually use internet marketing, internet advertising, Facebook, social media, and all of these other venues to actually let people know about what you're trying to do. Of course, the problem with all of that is that takes a tremendous amount of time and and in some cases it can actually cost you a lot of money. So this is no shortcut. Don't think that this is a lot of times people say, well, I don't have the money to hire somebody to help me raise money. I'll do it myself. But at the end of the day, whichever road you take, there's costs involved. I mean, you've either got have to have a lot of time that you can spend personally. You need to have things reviewed by attorneys. You may need to advertise, build websites, and all the rest of the stuff. All of that costs money. So it is not just some really simple process. And I think there's a lot of misconception about this crowdfunding thing that, hey, this is real simple. Now we can go ahead and just sell anybody on the street corner. I can just sell a bunch of stock to, and that is simply, not the way it works. Michael, coming up on commercial break again, this is absolutely great information. If you please stick with us for the next segment. It is Mike Manahan, Biz Rap Radio. I'm talking to Michael Hoffman, securities and exchange attorney, securities expert. We'll be back right after these messages. And welcome back to Biz Rap Radio for our final segment today. Thank you so much for sticking with us, and hope you're enjoying the show. Biz Rap Radio, of course, the show all about small business and entrepreneurs. And it's Mike Manahan. I am talking today with Michael Hoffman. Michael Hoffman is a securities attorney, securities expert. Just told us in the last segment that been practicing 23 years. And again, Michael, welcome to the show.
Thank you so much, Mike. Pleasure to be here.
So we've gone over quite a bit of stuff. We talked about putting together private placement memorandum. We talked about making sure we disclose risks as well as the good things about our company. We talked a little bit about this new crowdfunding area and some of the challenges with crowdfunding and the reality that if you're going to do crowdfunding, if you're actually going to sell shares in your company under these new crowdfunding rules, you still have to put together some form of document that gets approved by the Securities and Exchange Commission. So this isn't some exemption from all the rules and regulations. It's just perhaps a different set of rules and regulations that you're going to have to comply with. Michael, let's talk about the whole concept of being a publicly traded company, because I know you've had a tremendous amount of experience with that. And, some people are going to raise money from outsiders. They may take in 10, 15, 20, who knows, even 50 investors, but they have no intention of ever being a publicly traded company. Other businesses, that's kind of a goal and objective. But it's my understanding and experience that the whole process of becoming a publicly traded company is problematic. It's not easy to do. It's extremely costly. What is your experience, and what would your recommendations be to an entrepreneur who says, "Hey, I want to take my company public," like Bill Gates?
Well, it's a great question. I think it's great to be able to dream big. And when you think of going public, you think of raising lots of money, $100 million or more at one time, just raising a ton of capital. And that does happen for some companies. The key is to be able to have a great story. And a great story consists of a lot of things. Like, why would someone want to invest in are you building the next great Microsoft Corporation? Are you building the next great Intel? What is it about your company that gives people so much excitement and hope that they think that their $1,000 investment is going to turn into $1 million? So companies that sort of have that kind of excitement, that kind of trajectory, oftentimes want to think about going public because they need lots and lots of money to be able to make their business work, to pay the salaries, to buy the equipment, to do the marketing, to invest in the technology and the research and development costs associated with that, the logistics side of building a gigantic national, international kind of business. So for companies that are on that track, they've got, what do they have? Great story. They've got a great management team. They've got a great board of directors. They've got a lot of hype. And those companies that can build the excitement, build up the presence, can get money from the public, and they can get their shares trading on a stock market as they continue to spread the word about how amazing they are. And these companies can rocket overnight to sort of this concept phase to an actual public company growth story. It takes a little bit longer than it did back in the 2000s when you had a lot of these Amazon-type .com companies that were going public. But for companies that really do have a great story and a great opportunity, they can use the public markets to be able to access capital.
But I think it's fair to say that you've got to have I want to put that emphasis on great. It seems to me we've gone through some times in the past where a lot of not so great companies went public, and stockholders and investors lost money on those deals, or if they didn't lose money, they didn't make any money. The companies never fulfilled their economic potential. And so this is something I think you really need to think seriously about if you are an entrepreneur. You may think you have a good story. You may think you've got a business that has a lot of potential, but you have to be very, very confident, and not just confident in that you believe it, but that some reasonable business people have looked at what you're trying to do, and they have, based on whether it's market trends, whether it's societal trends, whether it's changes in the way the economy is working, or the way that people are purchasing or buying products. There's got to be a very high level of confidence that you can achieve very dramatic growth in a relatively short period of time, because if you think you're going to take your company public and you're going to grow at 2% a year or 3% a year, and you're going to make a 2% profit margin, your stock is basically going to be in the tank. Nobody's going to be interested. Is that right, Michael?
Yeah, that's right. I mean, think about where is technology heading? Where is growth? You think of things today that people are interested in. They're interested in electric cars. They're interested in renewable sources of energy. They're interested in creating new biotech, new drug discoveries. Things like that can get people very excited in something that's early phase, and companies like that can raise capital. But it's got to appeal to people and also just to professional investors that believe that your business has been vetted, has been validated by other reasonable business people before you really consider embarking on that path. And having experienced business people, experienced company industry professionals, all of that will really sort of help you decide on your own whether or not that's going to be a possibility for you or not.
And that's something we've talked extensively about on BizRap Radio. So many of our guests have said, look, it's great to be an entrepreneur, but you need to build a team around you. You need to have those experts that you can rely on to help guide you. And finding those people, getting them interested in your business, getting them on board is critical in many, many cases to the success of your business. I think there was an interesting study, I think it came out of MIT, that they compared businesses that had been funded where it was a single entrepreneur and businesses that had been funded where the entrepreneur had built a team around him, whether it be a finance person, a legal person, a production person, a marketing person, what have you. And by a huge, huge margin, those companies that had built the team were more successful and made more money for the stockholders than that company that was just basically one individual when that money came into the business. So that is very good advice. Michael, got about 1 minute left here. Any parting thoughts for the budding entrepreneur that's going to go out tomorrow and start to try and raise some money for his business?
Sure. Let me just say this. Please also go speak with your local SBA administration. There are grants and loan programs that you can get that also can help businesses get started. There are university-backed and local organization-backed, they call them incubators or accelerator programs that help companies get kicked off. And then we'll put you out there in front of investor groups and will allow you to network. Go to meetup.com and find a meetup that potentially supports you and your goals and your vision of whatever it is that you want to do with your business. But there's lots of great resources around you, and do whatever it takes to be someone that's honest, that's positive, convey your enthusiasm, your passion for your business, get other people excited, and surround yourself with the very best possible people that you can. And when you're not sure, always see if you can find someone to mentor you and give you some advice and allow yourself to make the best decision for yourself.
Okay.
And, don't be afraid to call on people to help you when you need it.
Okay, great advice from Michael Hoffman, securities attorney. Michael, thank you so much again for being on the show. Here at BizRap Radio, we believe we can fix the United States of America through a fundamental concept that individuals pursuing their own economic interests in free markets will create more prosperity for more people than can ever be achieved through government regulation and a planned economy. BizRap Radio, fixing America through individual economic freedom. That's it for this week. We'll be back again next week with another edition of BizRap Radio.